GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. Welcome back to the show, Gary.
Thanks for having me on again, Jim.
Gold, silver, copper, I noticed today, trading pretty well sideways. What kind of a trend is that telling us?
Well, the last time I talked with you, I said I was expecting a corrective move down into what I call a daily cycle low. It's just a minor profit-taking event, and we're getting that, but it's getting pretty late. If I'm not mistaken, I think the gold cycle is on day 39, so we should get the bottom here any day. Maybe it'll happen on the FOMC statement tomorrow, and then we're going to get another leg up. I really don't expect this intermediate cycle, the larger cycle in gold, to top. Probably, I'm looking for 1,500 to 1,550 before the intermediate cycle tops, and then we get a more sustained correction, one that lasts 6 or 7 weeks. But this is just a minor profit-taking event. I was expecting it, and it's running its course, and I think it's probably pretty close to bottoming. We might get down to 1,300 tomorrow. We might even go to 1290 or 1280. But once it's done, I think we got another. I'm about 99% sure we got another leg up.
How much is the price of gold influenced by what's happening in the stock market right now? It's kind of maybe temporarily trading inversely to the stock market. So as the stock market goes up, gold goes down. But those correlations are just temporary. They don't last very long. If you take a longer-term look at everything, I've been saying for months now since we've been talking together that everything was going to go up together. And if you look at the entire year of 2016, you can see that everything has gone up together. Stocks are generally heading up. Gold is generally heading up. Oil is generally heading up, although it's moving down into an intermediate cycle low right now. But you'll get these divergences that'll last for a couple of weeks or maybe even a month or so. But the general trend of everything is rising, and I think that's because the multi-year cycles all bottomed. For stocks and the CRB and energy, it bottomed in February. For gold, it was a little early. It came in December of last year. So we've got multi-year cycle lows that are in place. So everything is going to generally rise together, and that's how it should be. If every central bank in the world is printing money and doing QE, the natural tendency is for that money to land on everything. So everything should go up together, and that is what's happening. The finance ministers from the G20 said they will use every tool in the box to maintain the economy. Is that a good move on their part?
Well, I think it works in the short term and maybe even in the medium term, but the problem with this is that they don't look at the unintended consequences down the line. And so, we've got a pretty clear pattern over the last 16 years. Central banks, they print too much, they keep interest rates too low, too long, and then they create a bubble or a series of bubbles. And then when the bubbles pop, then they got a mess to deal with. So, we're doing the same thing we did, during the last decade. And so we're going to get the same end result. At some point here, we're going to get a bubble. Probably, the first bubble, I would guess, would be in the stock market. And then I think when that bubble pops, then I think you'll have a bubble in the commodity markets, more specifically, I think, in gold. So, it's worked so far. It's kept us out of recession since 2009, and it's pumped up asset prices, but I think they're going to go too far, and they're going to allow a series of bubbles to form, and then we'll have another big mess to deal with maybe in the 2020s.
Is it a lot better just to let those natural 4-year business cycles play out?
It is. If they would, they had the chance in 2008, 2009 to let everything, the cleansing process take place, and we could have been done with this and on our way up in a natural manner, but they didn't allow that. They cut rates and printed money. So we've been on this roller coaster ride now for 16 years. The stock market, up and down, and we've definitely got another down phase coming, but I think it's not going to happen until we get another bubble. It's just the way politicians are. You can't get elected by doing the right thing, because the right thing means that people are going to suffer some pain for a couple of years, 2 or 3 years, and then you've got another election between there, and you can't get reelected, so you can't finish the job. People will reelect the politician that's promising them that he's going to help them, and so it's just it makes it really tough to allow the market to do what it needs to do. So we kind of get into this this on again, off again type thing like Japan has been in for 30 years.
Do you think they're going to use Brexit as a convenient whipping boy for every economic problem that pops up for the next 2 years?
Oh, I don't know. I haven't kept up with it very much. They may try and stall the Brexit, or they may modify it. Who knows how long it's going to take to implement that, and how watered down it will be when they do. So, I never really thought that was going to be a big game changer. It was kind of the thing at the moment that everybody was focusing on, but once it's over, everybody kind of forgets it. I think that's already happening. Obviously, the market turned around immediately 2 days later, and just like I had suggested, we were going to go back up and make new highs, which we are. So I think the market still has a long way to go. Like I said, I think we got a bubble phase ahead of us. It's not going to happen immediately, but within the next 4 or 5 years.
Right, and I know some people are worried that we're going to see another major correction like we saw last August happen again. Probably, if it does, it'll be around the same period of time, late in the month.
Well, we're not going to go back down and test those levels of February. That was the 7-year cycle low. That's done. We've broken out to new highs. I kind of expect we're going to hold that breakout simply because it occurred so early in the intermediate cycle. We're only, I believe, 4 weeks into the intermediate cycle, and they don't generally top for between, say, 14 and 18 weeks. So we should have a lot of weeks still ahead of us before this intermediate cycle tops. I hesitate to guess at how high we might go. I don't know, maybe the S&P could make it to 2,300. If it did, then I think it would be unlikely that the S&P would drop back low enough to drop below the breakout, which was, I think it was at 2134. I think that was the 2015 high. So at this point anyway, unless I see something different, I suspect that breakout at 2134 is going to hold. Even when we get the next intermediate cycle low, maybe, I would guess maybe in October.
We'll have more with Gary Savage right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Gary Savage. Gary, oil has gone down the last 4 days. Some people are saying it may close below $43 a barrel for the first time since May. What's your outlook for oil?
Well, oil is just, it's in an intermediate decline. I've seen this 100 times in my career. It's just a profit-taking event, but when we get into these intermediate declines, the media and traders, they try to rationalize a fundamental reason for it, and there really isn't one. It's the fundamental reason is just human emotions. Oil went from $26 to, I think, a little over $51. That is a big move. Smart money, big money traders started to take profits. So the market started to go down a little bit. The retail traders that bought late, immediately started to have drawdowns on the positions, so they start to sell, to stop out of those positions. And then it kind of snowballs into, a more severe profit-taking event, a bigger profit-taking event than just a daily cycle low like gold is experiencing right now. So an intermediate decline is a multi-week profit-taking event, but that's all it is just a profit-taking event. And I expect oil will bottom here pretty soon, certainly by the first or second week of August, maybe sooner. And then we're going to have another leg up. I think we're probably going to see, by the end of the year, we're going to see somewhere between $60 and $80 would be my guess.
So actually, if you're looking to invest in the energy sector, just wait for this little dip and then you might make a great profit.
Oh, I think the energy stocks are where the next really big trending move is going to be, but you might want to just be a little bit more patient, maybe give it another week or two, and wait for oil to finish this corrective move. And then the XLE in particular has been consolidating. Actually, it looks like it may be making an inverse head and shoulders pattern, but once the XLE breaks through that resistance level that it's been kind of bouncing around underneath for 2.5 months, I think we're going to have a big trending move up, maybe to even as high as 90 on the XLE between now and the end of the year.
Do you think the average trader isn't taking a look at that? They're too focused on daily trends?
Well, retail traders are, notoriously very short-term oriented. A lot of them are trying to day trade. Very few people, retail traders, take a longer-term view of the market. They don't tend to be very patient. But, I would strongly suggest, instead of just looking at a daily chart, widen your charts out to 2 years. Notice, the bigger resistance and support levels, and you'll see on that chart of the XLE that there's just a major resistance level right above where we've been bouncing around at for the last 2.5 months. And when we break through that resistance level, I think the XLE is going to go a long ways.
If somebody wasn't all that familiar with the energy sector, should they stay out of it?
Well, I wouldn't necessarily try and pick individual companies. I don't do that myself. I just trade ETFs. If you if you don't have the expertise to analyze individual companies, or like me, you just don't want the company-specific risk of, of something happening to one specific company that you might be invested in. And the easy way to trade any of these markets really is just through the ETFs. Actually I pulled up a chart here, and it looks like that resistance level is right about 70 on the XLE. Once we break through that, then I think we're going to have a big trending move in the energy stocks.
On the money side of things, currencies, the U.S. dollar, it seems nothing can stop it from climbing right now.
I don't think the dollar has much further to go. I've been a bear on the dollar ever since we got that double top last year. We're in an intermediate advance, and I'm starting to hear that same kind of rhetoric that you just mentioned. Everybody thinks the dollar's going higher, but they thought the same thing last year when the dollar got to 100. The call at the time was the dollar was going to 110 or 120. It actually turned and went the other way. If you look at a long-term chart of the dollar, it had the big strong move, and then it pulled back, and then was it late last year, early this year, I guess, the dollar made a very strong, sharp move down below the 200-day moving average. And in my opinion, that should not have happened. If the dollar was going up and going to 120, then it has no business making big, strong moves, sharp moves down below the 200-day moving average. And generally, when something is topping, what will happen is you'll get that first shot across the bow, that big move below the 200-day moving average. Then price will come back up and try to recover it. And then when it loses it again, that's usually the end. So that's what we're doing right now. We've poked marginally back above the 200-day moving average, but that 200-day moving average is turning down. So I'm going to say that we're probably within days or maybe even a week of the euro bottoming, and when the euro bottoms, the dollar's going to top. And then when the dollar moves back below that 200-day moving average, I think that's probably it for the dollar.
Where would you go outside the U.S. dollar?
Well, I don't really like to trade currencies myself. They're just, of all the markets in the world, the currencies are the most heavily manipulated markets in the world. So they tend to be very erratic, very hard to trade. But I think the big trend is that the euro is probably done going down for at least, the next 6, 7, 8 years. And I think the dollar has started another cyclical bear market again for, they tend to last 7 or 8 years. So I think the dollar is going to be heading down between now and, let's say, 2020, 2021. And then that's when I think we probably get our currency crisis and we get the bubble phase in gold. It should coincide with with a major bear market bottom in the dollar. And the next 3-year cycle low in the dollar is due in the summer of 2017, and then the one after that would be 2020. So my best guess is that we'll probably have the major bear market bottom in the dollar somewhere around 2020, 2021, and a major top in gold at that same time.
Gary, thank you so much for chatting with us.
Thanks for having me on, Jim. Enjoyed it.
Our guest has been Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. You're listening to HowStreet.com radio. You can find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.